Ever wondered how real estate investment works? Well, you're not alone, and it's your lucky day. Welcome to the exciting world of bricks and mortar, where fortunes are made and dreams come true. Real estate investment, in its simplest form, is about buying property with the hope that its value will increase over time. It's a bit like planting a seed and watching it grow into a mighty oak. But why should you care about real estate investment? For starters, it's a fantastic way to grow your wealth and secure your financial future. Not to mention, it can be a lot of fun. Imagine owning a piece of a bustling city or a quiet countryside. The possibilities are endless, and the best part, you don't need a fortune to get started. All you need is a bit of knowledge and the courage to take that first step. So, buckle up as we dive deep into the world of real estate investment. Before we start investing, we need to understand what real estate actually is. So here goes. Real estate in its simplest form refers to property. This property can be inclusive of land, buildings, and any natural resources it may contain, like water or minerals. There are different types of real estate that serve different purposes. The first is residential real estate, which involves properties for personal use, like houses, apartments, and vacation homes. Then we have commercial real estate. This includes properties used for business purposes like offices, malls, and retail stores. And lastly, we have industrial real estate. This type of real estate is used for manufacturing or production purposes. It includes factories, warehouses, and power plants. Each type of real estate has its own unique characteristics and investment considerations, but they all share one thing in common. They offer the potential to generate income and increase wealth. Now that we know what real estate is, let's move on to why people invest in it. So why do people invest their hard-earned money into real estate? Well, it's rather simple. Real estate investment offers a host of benefits that can turn your financial world around. Let's delve into a few of them. Firstly, it's all about generating a steady income stream. Purchasing a property and renting it out can provide a regular source of income, and who wouldn't want that? Then there's the beauty of appreciation. Unlike that new car you've been eyeing, properties generally increase in value over time. This means that your investment today could be worth significantly more in the future. Lastly, let's talk diversification. Real estate investment can act as a safety net, spreading your financial risk across various investments. It's like not putting all your eggs in one basket, which can be a smart move in the unpredictable world of finance. Real estate investment can be a goldmine if you know what you're doing. In the world of real estate investment, there are some key terms you need to get familiar with. First off, let's talk about a mortgage. This is a loan that you take out to buy property or land. Most run for 25 to 35 years, but the term can be shorter or longer, and the loan is secured against the value of your home until it's paid off. If you can't keep up your repayments, the lender can repossess your home and sell it to get their money back. Next on our list is equity. Think of equity as the portion of your property that you truly own. It's the difference between your property's market value and the outstanding amount of the mortgage. So if your home is worth £200,000 and you owe £100,000 on your mortgage, you have £100,000 in equity. Now let's discuss foreclosure. This is a legal process that a lender initiates when the borrower isn't able to keep up with their mortgage payments. The lender can take possession of the property, evict the homeowner, and then sell the property as stipulated in the mortgage contract. Lastly, we have ROI, or return on investment. This is a performance measure used to evaluate the efficiency or profitability of an investment, or to compare the efficiency of a number of different investments. To calculate ROI, the benefit or return of an investment is divided by the cost of the investment. The result is expressed as a percentage or a ratio. Let's imagine you bought a property for £100,000 and sold it later for £120,000. The profit is £20,000, which, divided by the cost of the investment, gives you a ROI of 20%. These are just a few terms you'll encounter in your real estate investment journey, but knowing them gives you a head start. Now let's delve into the different types of real estate investment. First up, we have rental properties. This is where you become a landlord. You buy a property, rent it out, and then sit back as your tenants' rent payments cover your mortgage, taxes, and maintenance costs. Sounds peachy, right? Well, the upsides are a potential for steady income and capital appreciation. However, this type of investment requires active management and can be time-consuming also. The risk of vacancy can lead to periods without income. Next, we have real estate investment trusts, or REITs. Imagine a company that owns income-generating real estate and you get to invest in this company. That's a REIT. It's like buying shares in a corporation, but instead you're buying a piece of a portfolio of properties. The pros: you don't have to worry about managing properties, and you get a share of the profits. The cons: your investment is tied to the market's ups and downs, and the management fees can eat into your returns. Our third type of real estate investment is flipping houses. This is the high-risk, high-reward end of the spectrum. It involves buying a property, typically one in need of some TLC, fixing it up and then selling it for a profit. The upside is the potential for significant profit in a short period. However, the downsides are considerable. You might underestimate the costs of renovation, overestimate the market value of the renovated property, or struggle to sell the property quickly. Lastly, let's not forget about commercial real estate. This includes anything from office buildings to shopping malls. The potential returns can be substantial, but the risks and costs are also higher. Plus, these investments often require a significant amount of capital to get started. Each type of investment has its own unique traits, and it's up to you to decide which fits your goals and risk tolerance. Feeling excited about real estate investment? Here's how you can get started. The first step on your journey is to do your homework. Dive into research, familiarize yourself with terms, understand the market trends, and learn about different types of real estate investments. There's a wealth of knowledge out there waiting for you to tap into. Next, secure your financing. Whether you're saving, borrowing, or attracting investors, make sure you have a solid plan for where your investment funds are coming from. Understand that getting your finances in order isn't a one-time thing. It's an ongoing process that requires constant attention. Finally, find that profitable property. Don't rush this step. Take your time to find a property that fits your financial goals and risk tolerance. Consider factors like location, property condition, and potential for rental income or appreciation. Remember, every successful investor started somewhere, and so can you. Before we wrap up, let's quickly recap what we've learned. We started our journey by unwrapping the concept of real estate investment. We dove into the heart of the matter, defining real estate as the land, plus any permanent man-made additions, such as houses and other buildings. It's not just about property, it's about potential, opportunity, and financial growth. We then explored why people invest in real estate. The reasons are as diverse as the properties themselves. Some are drawn to the potential for steady cash flow, others by the prospect of long-term capital appreciation, and yet others by the tax benefits. Some are motivated by the tangible, physical nature of real estate as an asset, a brick-and-mortar investment that you can see, touch, and use. Next, we decoded some key terms in real estate investment. We talked about equity, the value of an ownership interest in property, and leverage, the use of borrowed capital to increase the potential return of an investment. We also delved into cap rate, a measure of a property's profitability, and cash-on-cash return, a way to calculate the cash income earned on the cash invested in a property. We then delved into the diverse types of real estate investment, from residential properties where the money is in the rent to commercial properties with their long-term leases. We also touched upon industrial properties and their unique benefits, and the exciting world of raw land investment. Finally, we shared some tips on getting started in real estate investment. Knowledge, they say, is power, and understanding your market, doing your homework, and being clear about your investment goals are the keys to unlocking the door to real estate success. That's all for now, folks. Thanks for joining us on this journey to understanding real estate investment. Until next time, keep exploring and learning.